How do you find a good versus a bad trading setup? In this video, I'm going to show you a very simple activity that'll help you define whether it's going to be a good setup or a bad setup. And at the end of the day, you guys all should be focused on quality over quantity trades. Before we get started, if you guys could like this video, if you haven't already, subscribe to my channel and turn on those post notifications. And guys, I did make a free Forex training. If you want that training, there should be a link in my description. And also, I did open up my one-on-one mentorship. So if you want to be mentored by me and learn my exact US30 strategy and how to get to $8,000 to $10,000 a month, send me a message on Instagram. Now, without further ado, let's get into the video. Alright guys, welcome to my computer. What we are going to do first is go to the month of June. June had a lot of clean setups that I find very profitable. Pretty sure it's June. But we're going to go to June 1st or June. Let's go to, June. Let's go to June 6th. So when I'm trading, let me go back to June. I don't know why TradingView does that when you are on the hour chart and then you go back to a date, it'll take you back to the date. Then you go to a lower time frame and it'll take you all the way back to where you were on the hour chart. TradingView needs to fix that. But yo, this is usually what I'm not looking for in the markets. I want to see a clean trend going into the New York session. So when I see that it's pushing up and down and up and down and up like this and then down, it's really confusing, especially with the market open. We have this 615 to 630 candle and it drops and then pushes up, stops everyone out, and then drops. These are very volatile, confusing markets. I do not like trading markets like this. Once again, we can see that it is kind of choppy. We are in an overall downtrend, then it bottoms out and starts to push up. This can be construed as a nice trade right here. We do have that divergence as well. Right here, we can see that this low was a nice low that formed. Then we had this low that went lower. But on our RSI plus, we can see that the divergence is there, signaling that it is going to go up and the buyers are going to start taking control of the market. So this would be a nice setup right here. But overall, this isn't my ideal perfect setup. I want to show you guys a setup that is very clear. And this is why I do not trade Wednesdays. Wednesdays are all over the place. Look at this 615 candle, bullish. But then it drops, shoots up, drops, shoots up, then drops. Very choppy markets. You guys do not want to be trading these. These are very emotional markets, I like to call them, because when you're in these types of market conditions, it's going to be hitting your stop. And you're like, why did I get stopped out? I thought my bias was right. And then you're going to try and take another trade. You're going to get stopped out, stopped out, stopped out. And it's just going to drive you crazy. And that's where you're going to be revenge trading, trying to get your money back. So try and avoid these choppy markets. And that's overall why I do not trade on Wednesdays, because they're all over the place. This video is sponsored by my program, FX University. Go to the link in the description to sign up, or there should be a link on this page. Once you go to join now, you're going to go to get started. And once you do, we're going to give you a code for 15% off. Go right here where it says to add promo code, type in FX1 and click apply. Okay, same thing Thursday. Okay, these are my ideal perfect markets right here. When I can see that we are just consolidating all throughout the Asia and London right here. And then the New York starts to push down and I see our definite trend. Now I'm looking at the previous day, we're already in a bear market, a downtrend. Then we have this consolidation, a bunch of orders are being accumulated right here. And then we can see that the market is starting to drop lower. So when I'm looking at this consolidation right here, I'm waiting for a break lower to break this consolidation. So right here on this candle, right into the New York opening, New York session, we can see it break this consolidation right here. And we now have confirmation that we are in a downtrend. So now that we're in a downtrend, I'm waiting for that 615, 630 candle to close, or the 625, 630 candle, and we have this bearish candle right here. I know for a fact that once I sell right here, it's just going to continue to go into its downtrend. And this is where I'm going to be aiming for the next psychological level, or even the next psychological level after that. Because when we have a lot of consolidation like this, this is telling us like, hey, the markets are accumulating volume. And there's a lot of buyers and sellers going against each other. But if we look at our overall trend, we're in a downtrend. So that's telling us that the sellers should take control over the buyers. And that's exactly what we see happening right here. We see that 615 to 630 candle close, drops down to the psychological level in 1530, 45 minutes. It hit that psychological low for over 2,500 pips. So these are my ideal perfect days. Let's see if we can find another day like this. Choppy. This is very choppy. Once again, it's a Wednesday. Staying away from that. Choppy as well for that Friday. Okay, this is a very nice day right here. We can see that we once again, for most of it, we can see that for the beginning of the Asia session, it's very volatile. It's dropping very hard, then pushing up. But notice in the London how it starts to smooth out. These are the days that I like to see where it's just smooth flowing. Because I know once the New York opens up, that's when the volume is going to be entered into the market. So we can see that we do have a bullish engulfing right here. We have our bullish candle at 615, 630. We rejected our 20 EMA, which is a very nice signal because notice how the candles were below the EMAs right here. And then right as the London session started to end, we transitioned right here where the candle started to go above our 220 EMA. So it's giving us a lot of confirmation that we now are going to shoot up. And when I took this trade, or if I were to have took this trade, I would have had my stops right below here. And then I would have just targeted for this next psychological level. Seeing the past, how it was just very smooth. And it wasn't giving me any choppy markets like this where it's shooting up, down, and then going down during the New York session. This is very smooth. This is telling me, okay, we're in an uptrend. It's going to continue to go into an uptrend. There's no reason as to why I need to go against the trend because at the end of the day, the trend is my friend. Okay? Very, very easy. See if we can find another one. These days are nice too. I like to see right before the New York session, it start to form higher highs and a higher low. Or I like to see like a lower low and then a lower high. So right here we can see that we did bottom out. We had this big W pattern being formed right here. And this was right before the market opened. We do have this bullish engulfing on these two candles. This bullish candle engulfed the bearish candle, giving us a lot of confirmation that it's going to be going up. So you could have bought off this candle, aimed for this psychological level, or you could have aimed for this psychological level right here. Really up to you. But this is like my ideal perfect trade up versus like choppy markets like this are very volatile. And these are the markets I want to stay away from because I don't want ranging markets like this. I want trending markets where I know for a fact, yo, it's going to go in a specific trend. It's not going to pull any BS where it stops me out and then goes the way that I want. I want to see the markets that are trending in a specific way. And this is a hack for you guys. I hope you guys are still watching this video because this is a hack. What I would do is I would go on your computer or phone and screenshot your ideal perfect trading setups. I would screenshot 2 bearish days, sell days that are your ideal perfect days, and then 2 bullish days, uptrending days that are overall your perfect days, and have those pieces of paper by your trade station. So when you're trading, you can look at that paper and be like, okay, does the present market that I'm looking at look like this or like this? And if it doesn't, just walk away because you want to be trading with 100% confidence. You shouldn't be showing up to the market saying, well, I'm going to guess, I think it's going to do this. You want to have 100% certainty that the market's going to go in the direction that you anticipate it's going to go into. And if you're not having 100% certainty or 100% confidence, then you're pretty much gambling. And at that point, it wouldn't be considered trading because there is no, can't even think of the word right now. You can't really figure out for sure it's going to go a certain way. So at the end of the day, guys, don't be gambling, be trading. Hope you guys enjoyed this video. See you on the next one. Peace out.